Hey, good morning. Good morning. Beat the Market. Welcome to Beat the Market channel. My name is Antonio. I'm the admin. Today I'm going to do some technical analysis on some ETFs and stocks that I will be looking into trading this week to help us all be prepared. First chart I'm looking at right now is the daily chart on the triple Qs. If you guys have watched my previous video, you would not be surprised on how the triple Q was so bullish last Thursday, last Wednesday. In my last video about covering the triple Q, I said that we would be in an A, B, C correction. We was finishing that. Here it is. So this is the A, B, C. And then I said that we are possibly in a third wave. So I explained it a lot more in depth in my previous video. So if you guys would like to check out the video and see why I felt and believe what I believe, definitely check out that video. But I was not surprised. I was not surprised. If you guys been on my Beat the Market page, you know I've been covering it, showing you guys and explaining to you guys why I believe this scenario to be true using Elliott wave theory. I said we had resistance at 321. If we could break it, we'll get to 324. A break above 324 and close would be very, very bullish for the triple Qs, especially the tech sector. So right now, this third wave is playing out. For next week, what I'm looking for is we do have a gap here around the 321 to about the 322 range, a little close, 322.48. So we have a gap right here. That's what these two purple lines are for. Also, that's right around where the 50-day moving average is. So a break above the 50-day moving average, it's very bullish for the triple Q. But we want to see confirmation. That's where we would enter. We don't want to catch FOMO and enter at the top. Look how this red line here. That's a 5-day moving average. That's very stretched from the 5-day, very stretched from the 20-day here. So we don't want to enter at the top. Okay, we want to wait for a dip, some type of pullback. You know, this 50-day moving average here was our previous resistance. So I would like to see it get retested as a support now, and that would be our best time to enter if we get that bounce. Plus, there's a gap, so we have multiple reasons why we believe why we should get some type of pullback. We could possibly even get a pullback down to 317, maybe 317 around where the 5-day moving average is, and then continue to blast off. Possibly, we might, and if we are in the third wave, we might not even get much of a pullback at all. But we don't want to enter at the top. Okay, as bullish as I am, I do not recommend entering the triple Qs at these levels. Wait for a pullback. Like I said, let's wait to see if it'll fill the gap around 321. Retest the 50-day. Will it retest the 5-day moving average or this resistant line here? Okay, it could also be a false breakout. If it breaks back down below the 20-day moving average, if it breaks down below 315, it could be a false breakout and keep heading down lower. We don't know. Price action will have to guide us. We have to wait for Monday and Tuesday to come. But right now, very bullish, guys. Very bullish on the triple Q. Called this out last week. If you guys been paying attention, you guys would be up right now. You guys wouldn't even be surprised at how much the triple Q is up right now. But like I said, I want to see some type of pullback. We are at resistance. Technically speaking, we're at resistance. I'll show you guys. We're at resistance. You see? Oh, let's make it a different color. Let's make it blue. All right, so you can notice it. And you see, test here, test here, test here. Kind of retest again. Okay, plus we have big gap right here. Very stretched from the 5-day moving average, very stretched from the 20-day. So I want to see some type of pullback before I enter into another position, okay? So still bullish, but just waiting for the pullback. All right, we're gonna take a look at the S&P 500 here. So this purple line at the top is a resistant line back from February 2021. Here, it was retested here in March 2021, and I kept it, kept it going. We're retesting that resistance right now. We broke above it a little bit. We closed above it. That's a good sign. Very bullish. Next resistance would be up here around 4.1. I think we're past that now. We watched futures on Friday, yesterday, or a couple days ago. I think it went up all the way to 4.1, 4.2. Let me double check. Let me check here. Yeah, futures is at 4,027.25. It's pretty up there. But we'll focus on SPY though. Next resistance will be up here around 4.1. Okay. So if you see it, just like the triple Q, SPY is pretty overstretched from the 5-day moving average. So we want to see some type of pullback. We might not get a pullback, but one thing I can tell you guys is don't get FOMO. I've been talking about how bullish I am on SPY since last week and the week before, guys. If you remember on BTM, Beat the Market, you guys would see the post that I've been making. I was very bullish on the SPY. So if you guys didn't buy it when it was down here, don't try to buy it while it's up here, guys. All right, we want to buy the dip. We want to buy off support. This is not support. Matter of fact, this is around resistant level. This is not where you guys want to go long. This is where, if anything, you want to go short. But in this bull market, I don't know if shorting is the best thing. If you can handle it, if you can do it, know what you're doing, that's fine. But this is not where you guys want to go long. Very stretched from the moving day average. It could keep going up. You never know. It could keep going. But I don't recommend us entering at this point, all right? You should have entered here or here. I was talking about it all week. And if you guys haven't seen it, then please join Beat the Market on Facebook and subscribe to the channel so you guys can keep up with my technical analysis. All right. So also looked at the VIX. I spoke about the VIX as well on Beat the Market. Look how stretched to the downside it is. Very stretched to the downside. Very far from the 5-day moving average. Very far from the 20-day. This is so bearish, but it's very stretched. It looks like it needs some type of retracement. Okay. Remember, the VIX, it inverts the S&P 500. It goes in opposite direction of SPY. All right. So we see SPY overstretched to the upside, and we see VIX overstretched to the downside. Okay, SPY is very bullish. The VIX is very bearish. This is good for the stock market. But do I recommend entering at these levels? No. Wait for a pullback, guys. I can't stress that enough. We enter at support, take profit at resistance if you're a trader. Even if you're a long-term investor, you can enter at support, or who cares, because you're going to hold it forever anyway. So, but if you're a trader like me, I do not recommend adding at these levels. Okay, guys? Wait, be patient, wait for the dip. All right? So, we have support. Of course, the 5-day moving average, which would be around 19 or 18.9. All right? And then I like to use my moving averages as support and resistance. So there's a $20 point. That's 13-day moving average. And then there's a 20-day moving average, which is around 20.8. All right, so it's very bearish, guys. We want the VIX to be bearish. That means low fear in the market, low fear. But it does look a little too overstretched to the downside. So if this does retrace back to the upside a little bit, that means SPY could retrace to the downside just a little bit. We'll see. So for SPY, we have support at 396.57. 393.92. Then is at the 20-day moving average, 392.24. All right, and if we can, bounce off of these levels, that will be very, very bullish. Looking for the S&P 500, and that's around where we want to enter, guys. Keep in mind it could change by Monday and Tuesday because these things move while the S&P moves. But you want to identify support and resistance. You want to enter as support, take profit at resistance. Okay, guys. If we break below the 20, we could drop all the way down to this. We have this resistance line. Support line. Excuse me. It started back from March. Was tested back March 25th. So it could get tested again here around 389. We also have this megaphone pattern right here. Top, you see the megaphone? Let me make it a little smaller. See, it looks like a megaphone. Just goes wider. So we got that. That will be our last. If it breaks below the 50-day moving average, that will be our last support for the bulls, which is around 382, 383, around that range. So that would be the bulls' last chance to defend, to keep this thing in a bull trend, uptrend. Break below this, and it breaks out of this megaphone pattern, then we're in trouble. Bears might be taking over. But that is another story for another day, if it even happens. But right now, we are so bullish, very bullish. MACD showing we are building momentum. Buyers are stepping in. We have, so. But like I said, we're overstretched, guys. So be patient. Buy your support. Always buy your support. Do not enter. Do not catch FOMO. All right, fear of missing out. You guys are not missing out. All right. So those are my ETFs. I want to take a look at some stocks that I maybe taking a look at. Got my eye on this week. Okay. So first one is Apple. As you can see, Apple is in a really downtrend. It's been correcting itself. Okay, I got this resistant line right here. A couple days ago, it actually broke out of the resistant line. All right, and it traded above the 20-day moving average. That's a good sign. Breaking out of resistant, staying above the resistant line, staying above the 20-day moving average. That's showing bullish strength. However, we did have resistance at the 50-day moving average. As you guys can see, we didn't even really test it. We didn't even get that high, and we had a red day. It was Thursday. We had a red day the day before Good Friday. So the fact that we're still under the 50-day, this is technically still a bear market as of right now. This is very bearish. This is a bearish chart. So what we want to see, if for the bulls, if we're bulls, we want to see we want to see Apple break above the 50-day. The 50-day is around 124.89. So we want to see Apple break above 124.89, get above the 50-day. Then we can start to say, hey, maybe the bull trend is resuming again, okay? But until that happens, I'm bearish. For all we know, you could get rejected at the 50-day and continue to move down to lower lows, all right? So be very careful, guys. Just keep an eye on it. Don't get bullish on this too fast just yet. If you want to, you can, but I don't recommend it just yet. All right, so I'm still watching it. I want to see it retest the 50-day moving average. If it gets rejected, I'll probably short it. If it breaks above it, then I'll wait for confirmation. If it breaks above resistant, I want to see resistant get retested as support. That's when I'll enter for a low risk, okay? For a low risk play, a low risk trade. All right, you break resistance, let it retest resistance as support. We enter at support, okay, on a successful bounce. Right now, I'm bearish, okay? So I'm not gonna get bullish on it just yet. And then Tesla has a very similar pattern to Apple right now. They're both bearish. However, Tesla did break out of resistance, and look at that. It broke beautifully above the 20-day moving average. This is great stuff. It's building bullish strength. However, look at that. It got rejected right at the 50-day moving average. That's a very bearish thing to do, okay? Breaking above the 20, okay, good. Bullish. And even on that same candle where it got rejected on the 50-day, it bounced off the 20-day moving average. So Tesla is in a crossroad right now. It's doing something bearish and it's also doing something bullish. So it's at a crossroad right now, okay? So we want to be patient. We want to wait to see what the price action is going to do, okay? If it breaks below the 20 again, maybe not. It's maybe not bullish. And if it breaks below the resistant line right here and continues to go down, it could end up being a false breakout, guys. All right, so we want to watch that. Could be a false breakout. But if it does get above the 50 and it's closing above the 50 multiple days, that could be signs that, hey, the bull trend is back. All right, so we got some resistance at the 50-day moving average. All right, even here as well. All right, because it got tested here. This is an important level. All right, so we could get back above. Oh, it was at 700, about 700, a little over 700. Then maybe this bull trend will continue, and we'll start, going long on Tesla again. But until then, it's trading under the 50. I'm still bearish on this, y'all, until it proves me otherwise. So just be careful. Whoopsies. Be careful with Tesla, y'all. Still bearish on Tesla. So, all right. So that's the stocks and ETFs that I'll be looking for this week. I hope you guys got something out of it. Before we go, though, I do want to talk to you guys about my Facebook page, Beat the Market. This is Beat the Market. I have about 264 members so far. I'm hoping to have more, guys. I really would like, if we could have thousands, hundreds of members, that would be great. Everybody just communicating with each other and helping each other, so we can beat this market. All right. The S&P 500 averages on a yearly thing like about 10% gain around there. So if we can get more than 10% gain on our portfolios, we're beating the market, guys. All right. So please come join the community on Facebook. We call Beat the Market. All right. It's a private Facebook, and we're here for each other. I do have my own Discord that you guys can check out. It's $105 for every 5 months. That's about $21 a month. Less than $1 a day, guys. And I'll send you guys all my research, my technical analysis. This is my Discord right here. I got market reports. I just started this, so this is the monthly market reports by Tom McKellen. This is not free, but I post it here for my members to help us navigate the market. All right, I got a section dedicated for SPY that I'll put all my technical analysis for SPY. These are the rules. Respect each other. Zero tolerance for hate, harassment. Buy signals at your own risk. I got a section for technical analysis. This technical analysis. I show my charts, what I'm doing. These are the indices, support and resistance. I didn't add much yet, but starting Monday, I will be adding all support and resistance in that channel. This is my YouTube to update my members, my paid members, when I drop a YouTube channel, made a video. Here, post all the profits. So far, it's only my profits. This is my account. I have a little over 170,000 in my account right now. These are all profits that I made this past week. But guys, I do not want to just see my own profit. I want to see my members have profits. I want to see y'all have profits. Okay, my goal is to get y'all to have money. All right, not just me. I want to help others. So join me, guys. Come be part of Beat the Market. I also have a section where it's for my double inside day scanner list. The inside days and the double inside days are some of my favorite trade setups. So I use my TOS scanner and I show you all my members and when there's a double inside day scanner, that shows up. Here I post all my trade ideas, and also here I will put all my trade updates. So if I make a trade idea, I'm not just gonna leave it. I'm gonna have a section where I'm gonna update the trades. So I had a trade idea back in March 24 for Microsoft. Got the support level where we buy. These are the price targets or the take profit targets. And I'll tell you guys where to, set your stop loss. So, minimize the risk. Okay, guys. Also have some chat rooms for questions that you guys may have for me. General chat so you guys can talk to each other. And suggestions on how we can improve together. All right. Thank you guys for listening. I hope you guys have an awesome, awesome day. And I hope you have a profitable week. Peace.